Hi everyone, we're here back with Josh Kittle with Opus Advisors, and today we're going to go over credit. It's a really big question for a lot of people, and so the biggest thing is, do you have to have good credit to buy a home? And Josh is going to tell us if we need that.
All right, well thank you. Actually, you don't. If you listen to the news, you'd think you'd have to, but even in the depths of the market crash in 2011 where lending was kind of tight, credit wasn't really the issue. The big difference that happened and what made credit more tight was actually just the qualifications as far as having to show your income and your assets. But we were able still to do credit approvals with the FHA programs with credit scores as low as 600. And so that's not a high score. The scoring system, there's different models and stuff, but typically they go from like a 350 to an 850. So no, you don't have to have perfect credit. But it's not just about the credit score, it's also about what's in that credit score. Why is the score what it is? So we have to look at those things by itself as well. So did you have is your score 600 because you just had a bankruptcy? Well, that would be something we have to take a look at. But if your score is low because you had a lot of late payments a couple of years ago, and since maybe paying off some debt, you just haven't reestablished credit, that could be a credit score that could work for our program.
So I have a question. A lot of times you see that, or I hear buyers say, oh, I'm going to correct my credit score. I'm going to work on it myself. So I know that that's pretty concerning. And what would you say the most common mistakes are for consumers out there that are trying to fix credit on their own?
Right. That's great because a lot of people, my first thing would be if this is something you're considering, is really you should talk to a credit expert or a lender to help advise you. One of the most common mistakes I see is that people will have old collection accounts or past due accounts in their credit reports that they basically haven't been paying. But when we look at the credit report, we can tell that those creditors haven't been updating the credit agencies for maybe 2 or 3 years. So yes, it still shows on there as this old collection account, but there's been no activity for 2 years, so it has a much lower weight value to it than current activity. What happens is if you go out and you actually pay that down or make a payment on it or pay it off, it then updates the next month, and now the credit reporting company knows you've had a judgment or a collection or a delinquent account for the last 2 years. And so actually paying that off, while you think it's great, you finally got that debt that's been there paid off, and that should be a good thing, it's not a good thing in the near term on your credit report. Now, a year or two down the line, maybe it's more beneficial. So what I would recommend is, again, reaching out to the lender to review that report. If you see credit items that report every single month as being in collection, that would be something that's worth paying off. If it's inactive, I would not pay it off. If the lender requires it as part of the loan, fine, don't pay it off, wait for the underwriter to request it, and then at closing, you pay it off because then you've already got your credit score, you've already been qualified, and then if it drops after that, you're not really too concerned. Another thing that's really not kind of counterintuitive is I'll see clients that will pay off all their debt, and sometimes having credit cards actually have a balance of $1 will make a difference. Will actually give you a better score than having a balance of 0. And again, it has to do with how the credit scoring companies are weighting things as far as how much weight they're giving to it in the overall calculation, and a credit card with a balance has more weight than a credit card without a balance.
So essentially, if I'm understanding this correctly, they're looking for healthy, active credit. Am I saying that right?
Yes, recent activity is what we're most concerned with. So the last 12 months is the heaviest part.
Mm-hmm.
And then other things like mortgage payments the last 2 years. But from an underwriting standpoint, typically with exceptions of major derogatory items like foreclosures or bankruptcies, which have mandatory waiting periods, a person who had a lot of late payments 3 years ago, a lot of times they go around thinking that I have bad credit because 3 years ago I had a lot of late payments. It's probably not as bad as you think, and it's probably, and again, you don't have to have a 700 or 800 credit score to qualify for a loan. So I always tell people, don't disqualify yourself. Get with somebody who knows what they're doing. Let them look at that, and they shouldn't disqualify you. They should actually just provide you with a roadmap on how, if you're not there today, how to get there tomorrow.
Right. So I know we have very limited time. I do have one question. What would you say, the lowest score is? I know there's probably no magic number. Like if somebody is in the 500s, do they have an option if they talk to you? If I was working with them on purchasing a home, is it possible? Could they do that?
Well, depending on different programs and stuff, we require for our programs a minimum score of 600.
Okay.
I do know FHA will go down to 580s. There's not a lot of investors that do it, but it is out there.
Okay.
But again, it's not just about the score; it's what's causing that 580 score.
Gotcha.
But I have had a lot of success with clients that come with me, where if we have the time, where sometimes in a little is 30 to 45 days, we're able to get 50, 60 to 80 point jumps. If what's
Wow.
causing the credit to be so low
That's
is
huge.
about what their balances are as a percentage of a credit line. Sometimes having a family member add them as an authorized user to their credit card, because what I'll find sometimes is borrowers have low credit because they had a bad history, and then they stopped using credit, and so they've really done nothing to kind of reestablish it. But by adding themselves as an authorized user to somebody who has a credit card that's been it's been open for 2 years, it's got a good history, low balance, and it's actively being used, I've seen 80 points just from 1 month to the next. So
Wow.
that's not a guarantee that everybody gets 80 points, but that's how it sometimes with credit is. Something as simple as that can make a huge jump. And I think the other important thing for borrowers to know is even if you think you have a good or okay credit score, the earlier you work with the lender, the better, because sometimes a 1 point difference can make the difference of qualifying for a program or not qualifying, or just getting a better rate. And if you come to the lender with a contract in hand, we don't have time to fix anything. But if you come to us early on in that process, then as you're looking for the home, we can be working and giving you advice on what you might be able to do to help boost that score.
I think that's amazing, and I can tell you personally, I have had clients that have walked down that road with that coaching, and it's made all the difference in the world. So again, thank you so much for being here. I hope everybody is able to walk away with something here. Bottom line is, please don't try to repair your own credit. Go to a professional, get that advice, and they'll coach you to success. And together, he and I can get you into your next home. So
Absolutely.
feel free to message me, and I can connect you directly with Josh, and we'll go from there. Thanks so much. Take care.